This is your technical update from the LMAX Exchange Research and Analytics Desk for Thursday, July 21st, 2016. Euro dollar. So overall, the euro remains pressure to the downside, breaking down below some recent consolidation lows, and the key focus now is on next key support going back to the 24th of June at 109.12. A break below that level will expose deeper setbacks to next key support at 108.23. At this point, any rallies are classified as corrective, with only a break back above 111.87, which right now looks to be a lower top, to compromise this bearish outlook. Sterling dollar. So cable has seen some consolidation in recent trade after breaking down to plus 30-year lows just under 128. At this point, there is risk for a bit more of a correction before the market considers the possibility of a bearish resumption, given how extended technical studies have been. But any rally should ultimately be very well capped up towards the 138 area, with a lower top side out ahead of the next downside extension towards key psychological barriers at 125. Dollar yen. So a key break in dollar yen on Wednesday, with the market taking out some key resistance at 106.81. This sets the stage potentially for a fresh upside extension towards next major resistance at 111.45. It will be interesting right now to see how the market responds on Thursday after breaking above 106.81. If it has trouble holding above 106.81, we could already see a lower top ahead of the next major downside extension, but a close back above 106.81 on Thursday will do a good job of maybe solidifying the prospect for fresh upside over the coming sessions towards that next key resistance at 111.45. Euro Swiss. So not much going on with Euro Swiss as the market mostly consolidates. It's been trading in a range over the past several months. We did see a minor dip down towards 106.23 in June, but overall the market has been very well supported on dips mostly towards the 108 area and could be poised for another bounce in the sessions ahead back towards the range highs in the 111.30 to 112 area. Again, if we saw a break below 108 or daily close below 108, that would compromise the structure and suggest that the market could be poised for downside, but until then, it's testing the bottom of a range with the expectation that we could see another bounce. Aussie dollar. So Aussie has broken down in recent trade after trading up as high as 76.77, but it looks like a lower top could be carving out now below that 78.35 2016 high, with the market seen accelerating back down towards next medium-term support at 71.45. Dollar CAD. So dollar CAD has been showing signs of the formation of a major base over the past several weeks, and it's going to take a break back above 31.89 though to confirm this base and accelerate gains up towards the 135 to 140 area. But in the interim, any setbacks should be very well supported, with only a break back below 26.55. That's the low going back to the 8th of June to compromise this basing outlook for dollar CAD. Kiwi dollar. So Kiwi has seen some sharp setbacks in recent trade after the market had traded up to 2016 highs just several days back, going back to the 12th of July at 73.25. At this point, this latest breakdown below key support at 69.63 opens the door for fresh downside over the coming days towards next medium-term support at 66.75. Any rally should be very well capped now up towards the 72 handle, while only back above that 2016 high at 73.25 will compromise this newly adopted bearish outlook. SPX 500. So the S&P 500 continues to trade up to fresh record highs, and the market now looks to be poised for a test of next key psychological barriers further up at 2200. Still, the market does look like it could be topping out on a longer term basis, and any rallies could be limited in favor of the next major downside extension, but it's going to take a break back below 2150 to officially take the immediate pressure off the top side. Gold. So gold has seen some pretty sharp setbacks after recently putting in a 2016 high at 1375, but the market overall is trading with a constructive tone and looking for that next higher low ahead of a bullish resumption back above the 1375 2016 high and towards 1400 further up. Look for previous resistance now turned support around 1304 to act as that solid support ahead of that next major upside extension.